Good morning. This is Chili Davis, and I'm back to do another stock video. In today's stock video, we're going to talk about 5 different stocks to watch for this week. Earnings Whisper is the website I use to let me know which stocks that I should be watching for the week and watching which way they get voted, which way they get voted up or go down, whether or not they beat earnings or they don't succeed in terms of meeting the expectation of the analysts, whether that's Jefferies or some other big analyst company. So here's some different stocks. You may not be familiar with all of them. Snowflake, it's a cloud software company. Dick's Sporting Goods, I'm pretty sure you're familiar with them, big retailer. Peloton, this is the at-home workout system, has a kind of like flat screen with it, so you can work out with your friends and family. One of my cousins, he's a big advocate for Peloton. He works out all the time, and he shares this stuff on Facebook. So Best Buy reports on the 24th, Riot reports on the 30th, and Salesforce, one of the biggest cloud productivity software, reports on the 25th on Wednesday. So this is Earnings Whisper, and we're going to check out Salesforce first. Looks like they've been up over the last week, 2%. They have a 52-week high of 284. So if their earnings goes well, we'll see this number get closer. This 256 get closer to 284. I think Salesforce is on track. They work with a lot of different companies, Fortune 500 companies. I know one of them is Bank of America. Just you name it. What it is customer relationship management software. So this manages your customer relationship. So if someone calls in, phone goes ring, Salesforce collects that information, the user's name, phone number, their location, and the reason they're calling. And each time that person calls, more information gets added to the database into the cloud. So that's what Salesforce is. It helps salespeople improve their relationship with their customer based on the last conversation they had, and the reason why they're calling and the reason why they continue to call to hopefully close the sale. So that's what Salesforce is. The stock is trading at 256 per share. They have a headquarters out of San Francisco, California. And they do a lot of customer relationship management and marketing of automation and data analytics. So basically they have, analytics on the last time they talked to that customer, what type of sale it is. So if it's I know one company I developed some software for, whether it was a student loan or whether it was a home refinance loan, Salesforce can collect all that information and then display it to the customer, and they can tell in real time this person is either close to making a purchase or they're not really interested. So that's what Salesforce does. It's basically data analytics and AI technology to help you manage your relationship with your customer in the sense that hopefully push or nudge that customer to make a purchase. So Mark Benioff is the CEO, looks like since 2001. I've used the software, worked for a couple of Fortune 500 companies. It's a great software. So I may buy some Salesforce, but right now it's still just on my watch list. Next ticker symbol we have is Crowdstrike, ticker symbol CRWD. Crowdstrike is a cybersecurity software company based out of Sunnyvale, California, provides cloud workload and endpoint security. So they basically provide protection to your network, and they're big on this, and they've been, over the last year, they've been just running wild. Over the last year, they're up 113%, or they've doubled in value, whichever way you want to say it. So they've done well. Last few days, they've been in a range. So, 240 down to 237, and it likes as a 52-week high of 272. So it is, I think, in a good buy zone if you want to pick up some more shares of it. We'll see if they exceed expectation of earnings this week. And, like I said, Crowdstrike is really important in terms of cybersecurity right now, with a lot of people working remote, not working from the office, but working from a remote location. That's Crowdstrike. Next ticker symbol we have is Peloton Interactive. Again, this is the workout platform that allows you to work out and share your information with some of your friends and family. Basically, you're working out real time with a workout coach online. You don't have to work out, sharing information with workout coach, but it can help you, improve your competitiveness. So I have a family member, they love Peloton. Again, it says here, Peloton Interactive is an American exercise equipment and media company based out of New York City. Its main products are connected to a stationary bicycle or treadmill that enables monthly subscribers to remotely participate in classes via streaming media. So there it is. That's Peloton Interactive. They did have some troubles earlier this year. The stock was trading as high as 157 per share. And then they had a few accidents at home where, the mother was in a different room or the father was in a different room, and a young toddler had the Peloton fall over on them. So Peloton has rebounded since. As you can see, it was 156, and then it fell as low as $83 per share. I think I got into Peloton somewhere about $90 per share. I haven't sold it because I think it's a long-term play, but ideally I probably should have sold it back here at 160 or 157 or so. But anyway, we'll see what they can do. I believe they're going to make some major announcements this week. Peloton has a lot of good relationships. Motley Fool saying, is it a time to buy? Some people are saying, what's happening with Peloton? I think Peloton is in a great range because you want your stock to hit certain platforms, plateau at certain times, and then figure it out. So sometimes if a stock is struggling around $100 per share, that may mean something new is coming, and you could figure out what the company has in the pipeline, whether it's a new service or product. You want to catch these stocks at even, like if you can catch them. Now, I've talked about how I like stocks at $70 per share, but then there's a point where you start saying, hey, I'm going to catch it at $100 per share. And then at that point, you say, hey, my entry point is $100 per share and my exit point is 125. So that's why you can make quick profits, where there's 20% or 30%. You can do it that way by setting price targets and price X. So that's just one strategy. There's several. Some people like to buy during the quarter. So let's say they started buying back in May or June, and then at the end of the quarter, if the stock does well. So let's just do like May. Okay, so if they bought the stock in May at like 80, let's just say luckily they got it at the bottom at $83 per share. They had a good feeling. They did their studying and research. They got the stock at $83, and now it's August. So it's June, it peaked at 126. It fell back down, and then it peaked again in July 20th. It's been down ever since. But from here, from $83 to $108, that's pretty good over a quarter. That's somewhere about 20%. So that's how you have to do it. You have to figure out, what is my entry point and what is my exit point? And this is Peloton. It's trading at 108, but over the last quarter, it fell as low as $83 per share. That's about a 20% growth over the quarter. So kudos to Peloton. We'll see what happens. on the earnings call. Let's see, earnings call for Peloton. Okay, 8:26, so that's Thursday. So, okay, Peloton reports on Thursday. Let's see what happens. Next stock we have is Snowflake. Snowflake is down over the last 5 days. This stock is trading somewhere about $266 per share. And this 52-week high is $429 per share. This stock had a lot of fanfare when it came public this year or late last year, because I think the likes of Warren Buffett and other, I guess what you call legacy investors got behind it. So the stock was kind of over bloated. And so now they're paying the price. The stock has basically been trending down. So if you look at the stock back in December, the stock was trading at $388 per share. And now it's trading at below $100 per share. I don't know where the bottom is on Snowflake, but I'm in a lot of other cloud plays. So this one was definitely out of my price range because I didn't believe in it. I generally buy stocks in the range of $80 to $100 per share. I'm really not interested in stocks that are 400 or 500. I will on a fractional, but not on a buying in the long term, buying and expecting to gain a profit. So this is Snowflake. They've been trending down since December. Back in December, they were 390, and now they're 266. So I don't know. There is a lot of powerful investors behind Snowflake. I'm not sure of their technology. There's so many other cloud plays. One that I'm following is DOMO, called Domo. So I'm into Domo. I'm pretty happy with Domo. As you can see, over the last 5 days, they were up 5% on Friday. And then over the last 6 months, they've been up dramatically, 40, 30%. So if you want a cloud stock to really get into, I would say Domo. Domo is a cloud software company based out of American Fork, Utah, versus Snowflake, which again is a cloud-based data warehousing company. And like I said, some early investors, Warren Buffett, got behind it, but the stock is now trading in a lower range. I'd have to do some serious studying on Snowflake, but I don't see any more value in it than other cloud stocks that I know are in the upward trajectory, like Domo. So these were 5 stocks that I'm watching for the week: Salesforce, Peloton, Snowflake, Crowdstrike, the cybersecurity, and also keep your eye on some fintechs. Fintechs are in the news, whether it's PayPal or Square. I'm actually a big Square bull. Square over the last year has done phenomenal. So check out Square stock. Seriously undervalued. Again, over the last year, they've been up. They were $141 back in September, and now they are $263 per share. So if you're also looking for some fintechs, check out Square or PayPal or some other fintechs companies. I think there's, let's see, what's that company? Affirm. Yeah, so there's another company called Affirm, but my 2 favorites are Square and PayPal. So this was my quick video on 5 stocks to watch for the week. It's Salesforce, ticker symbol CRM, Peloton. I do, again, workout, media streaming equipment, Snowflake, and the cybersecurity company, Crowdstrike. So I want to thank you for watching. Thank you for listening. Please like, share, and leave your comments below.